Thank you all very much for taking the time to join us today. I'm Ken Tamagawa, CEO of SORACOM. Today, I will walk you through our financial results for the first quarter of the fiscal year ending March 2027. First, here is the executive summary. In Q1 of the fiscal year ending March 2027, we achieved substantial revenue growth, with recurring revenue up 48.6% year-over-year to JPY 2.74 billion, and total revenue up 52.1% year-over-year to JPY 3.38 billion. On the profit side, EBITDA grew 81.5% year-over-year to JPY 316 million, and operating profit grew 69.3% year-over-year to JPY 215 million, also a significant increase. There are three highlights. First, as a platform KPI, our total number of connections finally surpassed 10 million this July. Coverage also continues to expand steadily, now spanning 206 countries and regions and 581 carriers. Second, the share of global revenue within recurring revenue grew to 50.5%. This represents very strong growth of 45.9% year-over-year, and we continue to steadily expand our global presence. Third, on our progress as an after AI organization, on the service development side, we newly announced an industry-specialized AI agent. On the productivity side, our SG&A to revenue ratio improved by 8.7 points year-over-year, reflecting steady efficiency gains through the use of generative AI. That concludes the executive summary. Here is today's agenda. I will walk you through the fiscal year ending March 2027 Q1 financial results, followed by progress on growth strategy. First, let me walk you through our Q1 fiscal year ending March 2027 financial results. This slide shows the quarterly trend in recurring revenue and incremental revenue. We place great importance on growing recurring revenue, which builds up steadily as a stock-based revenue stream. This quarter, recurring revenue continued its strong growth, up 48.6% year-over-year. This reflects the consolidation of Misora Connect, which we acquired last August, as well as the continued steady expansion of our global business, both of which are driving this sustained high growth. This growth is underpinned by low churn and high NRR. Our annual churn rate for key customers remains low at 0.4%, and our net revenue retention rate stands at 121%, a top-tier level even by global industry benchmarks. Because we provide IoT services, once SORACOM is embedded into a device, it is rarely churned, and revenue naturally accumulates as our customers' IoT projects grow. This is the fundamental strength of our revenue base. Next, let me walk through our Q1 results on a year-over-year basis. Recurring revenue grew 48.6% year-over-year to JPY 2.74 billion, and total revenue grew 52.1% year-over-year to JPY 3.38 billion. Gross profit grew 29.9% year-over-year to JPY 1.58 billion. Gross margin declined 8.0 points to 47.0% due to the consolidation of Misora Connect, which we began consolidating last August. Misora Connect currently has a relatively lower gross margin within the group, which is temporarily weighing on our overall margin. Going forward, we plan to improve gross margin by migrating Misora Connect's communication infrastructure to SORACOM's cloud-native mobile core technology. SG&A expenses grew 25.3% year-over-year to JPY 1.37 billion. However, thanks to efficiency gains from generative AI, our SG&A to revenue ratio improved by 8.7 points year-over-year to 40.6%. As a result, EBITDA grew 81.5% year-over-year to JPY 316 million, and operating profit grew 69.3% year-over-year to JPY 215 million, both substantial increases. Next, let me walk through our progress against the full-year forecast. Recurring revenue and total revenue are tracking at 24.0% and 22.4% of the full-year forecast, respectively. Solid progress for a first quarter. SG&A also continues to benefit from cost efficiencies driven by AI, and EBITDA and operating profit are likewise progressing steadily. Let me now walk through our recurring revenue KPIs. Recurring revenue is the product of ARPA, recurring revenue per paying account, and the number of paying accounts. On a group-wide basis, ARPA grew 30.6% year-over-year to JPY 1,044,000, and the number of paying accounts grew 21.3% year-over-year to 10.6 thousand accounts, both continuing to post strong growth. ARPA is already approaching our annual target level as of this first quarter. We will decide on and implement any upward revision to our full year guidance at the appropriate time after confirming results over the coming quarters. Next, let me walk through global revenue. Global revenue grew 47.0% year over year, a substantial increase. Global revenue's share of total revenue reached 45.7%. As I mentioned in the executive summary, its share of recurring revenue exceeded 50%, continuing to be a powerful driver of our growth. Adoption is expanding across our UK, Japan, and US hubs alike, and as an AI IoT connectivity platform, we continue to steadily strengthen our global presence. The US in particular is driving our global growth. US revenue posted a CAGR of 71% from Q1 fiscal year ending March 2024 through Q1 fiscal year ending March 2027, a very high rate of growth that is continuing. We also won new large-scale deals. As a new use case, SPAN, a US energy management company, adopted our platform as a backup connectivity solution for smart panels. This is a system where, even if a home's Wi-Fi or wired connection goes down, it automatically switches to cellular backup, maintaining continuous remote monitoring and control. SORACOM's reliable connectivity was the deciding factor in this adoption. Let me add some detail on our global KPIs as well. Globally, both ARPA and the number of paying accounts grew by double digits. ARPA grew 20.7% year over year to JPY 221,000, and the number of paying accounts grew 27.6% year over year to 2.7 thousand accounts. Notably, global ARPA is more than double the group-wide average, which we interpret as reflecting customers' willingness to actively pay for high value-added solutions, particularly in overseas markets, such as the US. Next, let me walk through our organizational initiatives. Over the past year, we have been seriously committed to becoming an after AI organization. Specifically, we transformed what used to be a large organization into very small teams organized by business, working as one with AI. We are also actively redeploying the human resources freed up through this streamlining into new growth investment areas. As a result of these efforts, employee AI adoption has reached 100%, and generative AI now writes nearly all of our development code. AI integration is also progressing in our products, with new AI-based products emerging. As a result, our SG&A to revenue ratio improved by 8.7 points, from 49.3% in the same period last year to 40.6%. I will also touch on generative AI-related product updates later in the growth strategy section. That concludes our explanation of the Q1 fiscal year ending March 2027 financial results. Next, let me walk through our progress on growth strategy. First, as the foundation for our AI IoT connectivity platform, let me walk through the overall size of the IoT market that underlies it. According to IDC, the global IoT market is expected to reach approximately $952.3 billion by 2029. This is a massive market spanning multiple categories: services, connectivity, infrastructure, software, and endpoints. And while connectivity remains our primary battlefield, we continue to expand our reach across each of these categories. Next, let me walk through our serviceable obtainable market. Based on IDC's research, our estimate of the 2031 TAM, total addressable market, for the IoT market is approximately $1.239 billion. Within this, the connectivity market, our SAM, serviceable available market, is approximately $124.9 billion. Against this backdrop, our 5-year expected revenue range of JPY 50 billion represents only a small fraction of the total market, which I believe underscores how achievable this range is. Given how large this market is, we see extremely significant room for growth. Let me now revisit the mid to long-term growth outlook we announced at our previous earnings call. We have set an expected revenue range of JPY 50 billion in revenue by the fiscal year ending March 2031. This implies a revenue CAGR of over 30%, which we plan to achieve while maintaining a recurring revenue ratio of 70 to 80%, with 20-30% of that growth coming from inorganic sources. We also place strong emphasis on profit growth. targeting an organic EBITDA margin of over 20%. To achieve this growth outlook, we are building on our position as the world's leading AI IoT connectivity platform to expand into multiple growth markets. Specifically, this means expansion into 4 growth areas: services for carriers, connected car, AI native cameras, and AI and IoT solutions. These 4 growth areas benefit from synergies as our AI IoT connectivity platform itself continues to grow. Let me now walk through the progress in each area, starting with the status of the underlying platform itself. Furthermore, the emergence of generative AI is currently creating tailwinds for the IoT market itself. Historically, the mainstream use cases in IoT were what's known as massive IoT. Applications such as smart meters and equipment monitoring. While data volumes are small, these use cases involve large unit volumes and long-term usage, forming a foundation for stable growth. Since the pandemic, industrial DX has drawn increasing attention, a category that includes automated control and payment terminals, where applications are embedded into on-site operations, resulting in high switching costs. And what is unfolding right now is physical AI. Representative use cases include AI cameras, dashcams, and drones. And going forward, we expect this to expand into autonomous driving, delivery robots, quadruped robots, and humanoid robots. Because this use case involves feeding real-world images and video into AI, it is characterized by large data volumes and high per-device unit prices, and it is growing rapidly. All 3 of these areas are expected to continue expanding, and our AI IoT connectivity platform itself continues to grow strongly along with this market expansion. Our group's total number of connections finally surpassed 10 million this July, a major milestone since our founding. Adoption is increasing across globally deployed connected products and services, and we continue to see steady growth. First, our AI IoT connectivity platform has earned strong recognition globally. As I mentioned last time, SORACOM KDDI was positioned as one of the leaders in Gartner's Magic Quadrant. Gartner's Magic Quadrant is a report from one of the world's largest research firms evaluating vendors along 2 axes: completeness of vision on the horizontal axis and ability to execute on the vertical axis. Being recognized as a leader in the upper right means we earned high marks on both vision and execution. Being named a leader in the Gartner Magic Quadrant is, in effect, a baseline requirement for making the final shortlist in RFP processes at large overseas enterprises. This opens up a deal-making layer we previously couldn't access, and we expect it to bring about a qualitative shift in our global revenue growth going forward. In addition to Gartner, we were also named the most valuable pioneer in QKS Group's AI Maturity Matrix for IoT Connectivity Management Platform 2026. This recognition reflects our native integration of generative AI into our IoT connectivity platform. Receiving high praise in quick succession from separate research firms gives us confidence that SORACOM's technical capabilities and business track record are being objectively validated on a global scale. Next, let me walk through Q1 progress across our 4 growth areas, starting with services for telecom operators. As a new initiative, we began offering our in-house developed cloud-native mobile core technology to domestic and international telecom operators, including MNOs and MVNOs. We already have a track record with KDDI, and while Q1 was roughly in line with the same period last year, we expect revenue growth over the first half. We have also newly begun providing our subscriber management database, HSS, to our subsidiary, Misora Connect. We are also working on improving Misora Connect's gross margin. Going forward, not limited to KDDI and Misora Connect, we aim to capture equipment replacement demand through expanded sales to telecom operators in Japan and overseas. Next, connected car. In the connected car space, we launched SORACOM Automotive Suite, which supports everything from in-vehicle connectivity to service operations. Connectivity plays many different roles in connected cars: vehicle control from an app and remote updates to firmware and AI models, in-cabin entertainment and Wi-Fi hotspots for passengers, and voice services for emergency calls. We provide a combination of these connectivity types, tailored to each country's requirements over the vehicle's long life cycle of 10+ years. SORACOM Automotive Suite comprehensively covers the functions needed for this, and we will continue to expand our collaboration with automakers and telecom operators, both in Japan and overseas. Next, AI native cameras. In this space, we offer SORACOM, which makes it easy to connect real-world images and video to AI and the cloud. This time, we announced a new model, SORACOM Pro, which has built-in cellular connectivity and can be used simply by plugging it into a power source. It supports waterproofing, dust resistance, and optical zoom, and can easily integrate with generative AI. It is scheduled to launch in September. As the eye of the AI era that makes it easy to digitize any site, we expect further growth in construction sites and infrastructure sites. As a concrete example, Toyota Industries Corporation uses SORACOM Flux together with AI analysis to automatically read truck license plates, which they use to manage on-site dwell time. Japan Airlines and JAL Cargo Service also use SORACOM Flux together with AI to automatically monitor the inside of refrigerated containers at the airport remotely. Last time, we presented the case of Tokyo Seikan. As you can see, cases like these using SORACOM and AI are emerging in large numbers. And finally, in the AI and IoT solutions area, we have also newly announced another AI and IoT solution, SORACOM Agent. This is a service in which an AI agent trained on SORACOM's expertise supports you in articulating, implementing, and operationalizing IoT complexity and on-site tacit knowledge. Simply tell it your goal, and it will autonomously complete the task, so even non-experts can consult it with ease. Its key features include retaining long-term memory of each project so that on-site tacit knowledge accumulates over time, operating securely within an isolated environment for each user, so that any data entered remains the user's own intellectual asset, and requiring no local environment, so it's ready to use instantly from SORACOM's web console. Let me show you a demo of this SORACOM agent. As you can see, you can start using it right away on the web, and simply by consulting via chat, an agent with IoT expertise will assist you. What's interesting about this agent is that it can remotely operate and control IoT devices. For example, there's a SORACAM, which I introduced earlier, placed in our SORACOM office. If you instruct the agent to use the SORACAM to find Lovett, a robot in the office, it will automatically operate the camera, analyze images, and notify you of the detection results. The AI agent also provides end-to-end support, from creating IoT application specs, to building the device, to building the IoT app itself. SORACOM Agent has been announced as a technology preview, and going forward, we look forward to advancing real projects together with our customers and partners. Finally, today's summary. First, in Q1 of the fiscal year, ending March 2027, we achieved substantial revenue growth, with recurring revenue up 48.6% year over year, and total revenue up 52.1% year over year, and the share of global revenue within recurring revenue reached 50.5%. Second, our AI IoT connectivity platform surpassed 10 million connections and was recognized as a leader in the Gartner Magic Quadrant, and was also named Most Valuable Pioneer in QKS Group's analyst report for platforms incorporating generative AI, steadily strengthening its presence as a global platform. Third, each of our 4 growth areas, services for telecom operators, connected car, AI native cameras, and AI and IoT solutions, saw new announcements and progress, and our growth strategy built on the AI IoT connectivity platform continues to advance steadily. That concludes today's presentation. Thank you very much for your attention.